Hi everyone, thanks for watching this video. Wanted to share something with you that's important to me and I think is going to make a big impact in your financial planning. One of the things I'm going to ask you is, what do you think is the number one thing you could do today that would really move the needle for you on your financial planning goals? What's the number one thing you could do? Put your comments below. I'd love to hear what it is. Virtually there could be a couple dozen things you could do, but in my belief is that the number one thing is to get great advice. I know you're saying, yeah, of course, get great advice. But sometimes it's hard to get great advice. And so I just want to point out one of the things I did with a couple. This is a new couple, referred to me. They wanted a second opinion, portfolio review. Just wanted to, test the water. What's going on with our portfolio? Are we making the right decisions? Ray Dalio said in his book, Principles, how do you know you're right? And he built into his culture. If you don't know Ray Dalio, look it up. He's one of the wealthiest individuals in the world. One of the most successful companies in the United States. So one of the things they built in their culture was, how do you know you're right? So he would ask colleagues to give him candid, direct feedback, not abrasive, not sarcastic, really examine my data points and help me to see whether or not I'm right, because I'm adamant that I'm right. So how do you know you're right? Get someone else to look at what you see and ask for their opinion. That's a second opinion portfolio review. There's no harm in getting that done. Go to someone that you can know that they're trustworthy and that they've got a good enough experience and they're actually doing the kind of work that is relative to where you are in your investment cycle, if you will. If you're nearing retirement, you want somebody who has clients that are in that spectrum. If you're in the family market with kids and you have education savings plans and paying down debt and lots of expenses, you want somebody in that market. So it's just really easy to do. It only takes about 45 minutes to an hour of your time. You can do it virtually, is what I did with this client. And I'm going to share with you now what I saw real quick. It should jump off the page. It literally will leap off the page when you see this. You'll see exactly, as I did, what needs to change. And in a matter of minutes, we move the needle in such a big way for this couple. So again, this is a couple that says, we have an advisor, right? So I get that all the time. 20 years of doing this business, I hear it all the time. We have an advisor. And I say, it's okay. I kind of expected that everybody has an advisor because I want to believe that people are getting great advice. But it doesn't mean you're always getting great advice. So let's have a look here at the screen. So who are this couple? They are 55 and 56, 5 to 6 years away from retirement. Their portfolio return is 5-year 2.27%. That's terrible. And I know you're saying, David, it's not fair. COVID-19 has decimated everyone's portfolios. And I would say it's true. Recently, in March, the market went down and it's come back up. So the last month and a half, we have seen really good gains in people's portfolios. And we're also not very far away from the all-time high before the market crashed in March. So what I want to point out is this negative 10.5%. So someone who is 5 years away from retirement should not have negative 10.5% return in their portfolio. This is detrimental to you. So there is a retirement zone, the 5 years before retirement, the first 5 years in retirement, we call that the retirement zone. In that area, you want to have a low risk tolerance and you want to have no negative returns. Okay. We'll say severe negative returns. There's bound to be years where there's going to be some negative returns, but you don't want anything too severe that's detrimental, because what happens in that environment, especially the first 5 years of retirement, is negative returns will seriously erode your balance. It will do serious damage to you being able to fund your retirement throughout your retirement years. In fact, it may even cause you to outlive your money during retirement. So you want to make sure you have a portfolio that's not too aggressive. In this case, look at this. On the left-hand side, 90% of the money in this portfolio is in equities. So again, 55 years of age, 5 years from retirement, should not have 90% in equity unless you're part of the 1% club where you have money to burn. Then this is not a problem for you. But for many Canadians who are working for a living, they have moderate balances, and they need to make sure that their portfolio is not like this. So 50% equity is a better ratio for this couple. So what do? Immediately we move them into a portfolio where the cost to investing was 1.5% lower than they are today. 50% stock component, not 90%. And I also had a little bit of issue of saying the sector mix. I thought healthcare, technology, and financials are the top three. So finding a fund that had those top three components in it at a 1.5% lower cost to investing, and the amount of equity, or the equity component, was much less. It's not difficult, actually. I know for a lot of you that are looking at this, you're like, that is way too much information. But believe me, guys, advisors in our business, that's what we do all day long. This is easy to do. This is not financial planning. This is not creating a financial plan. This is not looking at how much money they're going to need in retirement. This is just one aspect of this person's financial picture. Not looking at life insurance, not looking at mortgages, just what are they invested in? Like, we're wrapping a circle around. This is the only thing I'm looking at today. And it's easy for us to look at that and say, here's what we see. I hope you see those are things that you could look at and say, look at the cost of investing, 3.34% with thousands of investments to invest in. Why would you choose something so high? Now remember, they have an advisor. This is someone who apparently thinks this is good for them. And this is terrible for them. So it takes only a few minutes. You get unbiased advice. If you're interested in doing a review, it's super easy to do that. Reach out to me on LinkedIn, send me a message on email, give me a call. All my contact information is here. It is absolutely simple to go through. This is actually a simple portfolio to go through. There's some portfolios that are much more complicated, but it doesn't matter. It's relatively the same kind of thing. And if there are more complicated issues, like you're a business owner and you have this issue over here you have to deal with that has something to do with your portfolio, it's okay. They're easy to go through them step by step, one thing at a time, and it'll take 45 minutes of your time, maximum. I hope you have a good day. Thanks again for watching this video. Please put your comments below. I want to hear what your thoughts are, what you think, what you see, what I see, if those kind of things jump out at you, because it'll help you to re-examine your own portfolio. Those are 3 easy things for you to look at in your own portfolio, so where you sit. Again, be well, be safe, and again, thanks very much for watching today. Have a good day. Take care.